Hey, this is Brad Gill at NextHome Lifestyles. Welcome back to another market update for the city of San Jose. It is the week of September 12th. Let's dive in and take a look. So we're going to start off with active inventory. Active inventory, we had a little bump this past week. We're up to 847 units available. That's single family homes, condominiums, and townhouses across the entire city of San Jose. Keep in mind, we're still 23% already down from the peak that we had back in July. So our inventory is actually declining much faster than we thought it would as we're heading into the wintertime, which normally during a normal season, we definitely see a pretty steep decline coming into it within the inventory resetting in January. So we're definitely going to have to keep our eyes open to see what happens with inventory. But we did get a little bit of a bump, which is good news for buyers. Kind of helps keep those options open. Let's talk about that. Pending activity is down. We did drop to 627 units now pending sale. That's down from 673 last week. So we do have a little bit of a trend in a decline in buyer activity. That's not surprising, since we've also had back-to-back weeks of increases in interest rate. We are starting to head up towards that 6% level again. As you may recall, the rates have really been bouncing between 5% and 6%. And a 1% increase in interest rate has enough power to reduce a buyer's purchase power or affordability by upwards of $150,000 or more in our market, with our average sales price being somewhere around 1.4, 1.5 million. So it's a pretty big impact. So I'm not surprised to see some of that buyer activity pull back a little bit. In addition, our NASDAQ index, again, a lot of the companies in Silicon Valley listed on the NASDAQ being tech companies, and the NASDAQ has just been, over the last couple of weeks, hit pretty hard, although this week it is starting to rebound. But let's get back to market stats. Trends, what are we seeing? Again, inventory is up almost 20% week over week. Again, that's good. More units coming back. More units coming back, again, should allow more selection for a buyer. So another really good reason for a buyer to be out there acting pretty aggressive and looking for the right home. It is a great time. Buyer demand trend, again, we're seeing it down 14% week over week. And again, attributing that to a continual increase in the interest rate, and then also a decline in our local technology company stocks. Market expectations. Last week we saw a huge number of properties that came off the market. This week we're kind of back on that normal trend, which has been about 50 properties on a weekly basis. Price changes, we're down to 34% from 35% the week before. Again, we're kind of hanging out in that 30 to 40% range. 30% is pretty normal, expected, so we're still above that. But it's also showing again that sellers aren't just completely dropping prices, so there's some stability in the market still. And I think that has to do with, again, we're almost 25% off the inventory peak already this year, and that's expected to continue to decline. And then interest rates, we're up to 5.89%, up from 5.66 last week. So the message to home buyers, you got a lot of selection out there. We'll keep our eye on interest rates, but there is a lot of pressure for rates to continue to rise into next year. So it's not a bad idea. Again, shop around, get pre-approved more than one lender. But now's the time where you're going to find the most selection available to you. For a seller, pricing matters. Really look into what price point makes sense to help make sure that you are not chasing a continual price decline, but bringing that attention that you're looking for. If you are thinking about buying or selling, feel free to reach out. We'd love to talk to you about a strategy just right for you. Otherwise, thanks again for watching, and I hope you guys tune in next week.